You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. Welcome back, Brandon. How you doing today?
Hey, mate. I'm going quite well, actually. Quite well.
Yeah.
Sun's shining for once.
Yeah.
My God, it's literally 2 weeks. Less than 2 weeks? Yeah, less than 2 weeks until the start of summer.
Yeah.
And in Canberra this week, it was 0 degrees overnight and just like bucketing rain, top of 12 degrees, freezing cold. It was actually snowing at one point.
Yeah.
I know we shouldn't complain. We live in Australia, so any time that it's not a severe drought, we should be happy. But I'm so over the rain, dude. I'm so over it.
Yeah.
Just want sun.
We haven't had 0 degrees here, but it's still a bit rainy and spotty weather. Yeah. Some days are like 22, some days are like 10. So it's just, where's our summer? Like, I just wish the seasons would just be, honest about themselves. Like give us a brutal winter. Just smack us in the face with but then give us a glorious summer. None of this like, oh, we're still in autumn, basically in the middle of spring or something like that. But yeah, it is what it is. Yeah.
For those that live around like internationally, Australia is currently in its third consecutive La Nina, I think. Yep. So it is exceptionally wet in Australia. Yeah. Which is, Australia is kind of known of being dry, barren, desert, hot, but it's not been like that the last couple of years. No. But yeah, I saw a great meme the other day, which is like, I really hope summer falls on a weekend this year. It's like, yeah, it's so true.
Yeah, geez.
That's the way it feels at the moment.
No.
Anyway,
yeah.
How you doing anyway? What you been up to? You feeling good? You're not sick now?
I'm back. Yeah, I was just telling Brandon off air. I've had so much like time off just being sick recently that I have so much energy, which is good because I'm like really enjoying my work at the moment. But that's good. It's just been frustrating to just can't get any kind of consistency. But that is what it is. You can't help getting sick sometimes. So
go get like 15 flu shots.
Yeah,
Hashtag not medical advice.
Yeah, exactly. You just hook the vaccine up to me in a drip. I'll just
yeah, you better start on the hydroxychloroquine.
Yeah, exactly.
Man, that's an old meme at this point, isn't it?
Oh boy.
Get the bleach out.
Yeah, don't do that.
Anyway, don't do that. Hashtag not medical advice.
No.
Oh dear. Anyway.
Yeah. No.
What do we got to talk about today, dude? We got some pretty big news stories, I'd say, this week. But
yeah, we
got Bob Iger.
Bob Iger is back at Disney. Massive.
He is. You got Elizabeth Holmes is not back.
Yeah, she's gone.
She's gone. I'm going to talk a little bit about FTX Contagion and Elon Musk. He never fails to
get in the news cycle,
does he?
Yeah.
He always gets to the news cycle. He's been saying a lot on Twitter about Twitter lately.
Yeah.
And maybe if we got time, we'll talk a little bit about Credit Suisse as well. So we've got quite a bit to talk about today. Should we just get into it?
Yeah. Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, or you can add your trades manually using Excel or one by one. And when you do that, essentially the software will allow you to track all of the different gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans on ETFs or individual companies, it will do those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, as well as use the tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, and you can track up to 10 holdings for as long as you want. So if you just want to try it out and see what it's like, it's completely free. There's a free plan. It's not a free trial or anything like that. you can just try it forever. But also, if you want to use that link and get 4 months off an annual subscription for more features, that's also available to you through that link. So as always, thanks to everyone who has used that link when signing up and is, of course, supporting what we do here every single week, most weeks when Hamish isn't sick.
When you're not sick, dude. Yeah, exactly right. All right. With that said, let's talk about some news. Can we start with Bob Iger?
Bob. Yeah, we can start with Bob Iger. Bob is back.
All right.
Well, one Bob in, one Bob out.
Yeah, it's kind of funny, isn't it?
There's a lot of
called Bob.
There's a lot of CEOs that are called Bob. It's a very or like Robert, I guess. So there's like a lot of I don't know. It's a common CEO name. So if you're a young Robert out there, I'm expecting big things. Expecting to see you. The pressure's on. No, but so former CEO of Disney, Bob Iger, has returned as the CEO of Disney. Bob Iger was, of course, CEO from 2005 to 2020, so he had a massive stint at Disney, and it was a very crucial and important time for Disney, where the company saw, I think, a 5-fold increase during that time. So he was very influential in the success of Disney. He oversaw some big acquisitions: Pixar, Marvel, Lucasfilm, and the 20th Century Fox merger. Just all of those things.
It's He did so much. Like if you reflect and look back on what he did, he has really been responsible for a lot of what we would call like modern day Disney.
Yes. Yes.
It's insane. Like if you open Disney Plus and you see the categories, Marvel, Star Wars, National Geographic, all those different categories. Bob Iger is the reason that they're there. He led the acquisitions of all of these big entertainment brands. So it's very and he was the one that kind of led Disney through the build out of Disney Plus.
Exactly. Yeah. So Disney Plus launched in 2019, and even though that's quite a bit after, Hulu was already existed and that was owned by Disney, or at least mostly owned by Disney, and Netflix, of course, was already around, and Amazon Prime Video was already around. But in terms of big media companies, Disney was one of the first ones to really come out with a flagship streaming service far before HBO and a couple of others. So he, of course, as you said, kind of led the way on that. And he's back. And as I said, one Bob in, one Bob out. Bob Chapek has, of course, been fired. And Iger is going to be, he's already started, effective immediately. So there's no kind of transition period. Bob Chapek just, he got the flick and he's gone. And I think, I said this in a video yesterday where I covered this a little bit, but I think Bob Chapek's probably going to cop and has copped a lot of criticism, especially because Disney stock has done kind of so poorly this year, even though maybe that's not really much of a reflection of his decision making in Disney. It's kind of been a strange time for him to have been at the.
It is unlucky
at the head of the company. Exactly. I mean, he picked up the company during the pandemic, which was kind of a difficult time right at the beginning of the streaming transition as well, and now through this inflation crisis. So the stock's actually down 45% this year. So that always gets credited to the CEO, unfortunately, even though a lot of that's outside of his control. And the other big kind of talking point around Chapek has been that their streaming services, the direct-to-consumer segment of Disney, has in the most recent quarter lost $1.5 billion, which was actually a doubling in the loss from last year. So essentially, and this is kind of happening at the same time as their cable business has continued to decline. So you've kind of got this declining legacy business that produces a lot of cash flow, and this new streaming business, which is just burning more and more cash flow every single quarter. And again, unfortunately, Chapek has kind of been caught in like that transition, which has been difficult, not only for Disney, but for kind of a lot of media companies.
And if I remember correctly, I think when they launched Disney Plus, or about to launch it, they did a big investor presentation. Went for like a couple of hours. It was like a live kind of presentation. People would come up and speak. And I think they actually announced, I could be wrong on this, so please feel free to fact check me, but I believe that they announced that in 2023, that was the year that they expected their streaming efforts to start to turn a profit. So they had this whole plan. We knew this from the start. Undercut Netflix, get focus on subscriber acquisition, claim your market share, and then after you've got the market share, start to ramp up price, make it profitable. The investments are starting to reap the rewards. But it does look like they're a long way away from that.
Yeah.
Judging by their most recent quarterly report.
Yeah, I don't know for sure. I'm pretty sure you're right on the 2023. I know for sure that most recently, Chapek extended that to the end of 2024. So I don't know exactly whether it was, you might be right that it was the end of 2023 and they extended it to 2024. But regardless, becoming profitable in streaming has been much more challenging than some of these media companies I think first expected. And to be fair, I think Disney's services are still a lot cheaper than, say, a Netflix. So potentially there is room for them to, increase their prices. They have a huge subscriber base, way bigger than Netflix's now, if you include, all of their subscribers globally. Yeah. So it's a matter of whether they can monetize those subscribers, which are currently about a third as valuable as a Netflix subscriber. Whether they can, ramp up prices and whether customers will be, resistant to that, in any way. Interestingly, it was only last week that Chapek was continuing to make moves. He announced a hiring freeze as he kind of announced that the company was looking to cut costs. And then, just a couple of days after he sent out that memo, he was let go. So I'm not sure when they told him that he was going to be let go. But it seems that it happened extremely abruptly, which was kind of interesting. When Iger took over on Monday, he shared a memo with staff where he spoke about what he kind of plans to do. He indicated that Disney is going to reorganize its media unit. And he said, and this is a quote, "A new structure that puts more decision-making in the hands of our creative teams and rationalizes costs." He went on to say, "A goal is to have the new structure in place in the coming months. Without a question, elements of Disney Media and Entertainment Distribution, which is their whole media segment, elements of that will remain, but I fundamentally believe that storytelling is what fuels this company and it belongs at the center of how we organize our businesses." He went on to say, "This is a moment of great change and opportunity for our company as we begin our second century." And to me, that sounds like he's planning on making some big changes. I mean, what did he say? He essentially said some elements of Disney Media and Entertainment will remain. And that segment is everything. That's their cable, their licensing, their streaming services. And he's saying some will remain. So to me, that indicates that at least some parts of that business are going to get spun off or sold or at least reorganized in some way. But it sounds like he plans on making some significant changes. When he says, focus on storytelling, the way that I see this, and obviously we don't have any information on this yet, so we'll kind of see how it plays out, but I presume that means that he wants Disney to lean more on the production of film and studio and maybe less on how it's distributed. So just to give you an extreme example of this in the media space, Sony Entertainment is a film studio, same as Disney's a film studio. But Sony Entertainment doesn't do any distribution. So they make great films and then they license them to theaters and then they have a licensing deal with Netflix and they do, YouTube pay-per-view and Amazon pay-per-view where you can just kind of, rent it on all of that stuff. But essentially they don't actually do any of their distribution, whereas Disney is doing a combination of both, right? They have these incredible film studios, Lucasfilm and Marvel and that sort of thing. And then they have their cable networks where they distribute and they have their streaming services. And with the cable networks in decline, it's possible that they could spin some of those off and maybe focus more on licensing content or focus more on their streaming services. It's going to be really interesting to see how they decide to reorganize themselves because they do have a lot of distribution assets which seem to be kind of going away and maybe they can get some money for them now before they completely die in a way.
Yeah. And it's like, you're right, because it's now that they've got Disney Plus, it's been such a focus for them.
Yeah.
And it's such an easy, it's direct to consumer. It's such an easy way to distribute your content.
Yeah.
We've even seen through the pandemic, movies that have kind of just not been shown at the cinema and have just gone to the streaming services straight up because cinemas have been closed and that sort of thing. So it is kind of interesting that they have this new product, which will be a big thing in the future. Well, it's already big now, but will be very critical in Disney Plus in the future. But that product is kind of at odds with the existing legacy businesses of film and cable and blah blah blah. So you're right. Maybe we see some sort of selling off of some businesses to have like one unified like vision of how we're going to do this thing going forward. But it seems interesting. I mean, he's not afraid to get things done and make big calls. Like Bob Iger has made a lot of big calls in the past for Disney, and to his credit, that pretty much all of them have worked out very well. Yeah. So I think it's in good hands. But he also. The reason I like Bob Iger is that I like Bob Iger for Disney is because he came up through the ranks. Like he worked at ABC and that's how he worked his way up the chain. And then Disney acquired ABC and then he worked his way up the ranks in Disney and that sort of thing. So he knows a lot of the different parts of Disney's business, quite intimately. Like he's been there, he's done that. It's not like getting an outsider in and just looking over the business and being, oh, that doesn't make a profit. That does. We'll get rid of that and we'll focus effort on. Like he knows these segments. So I think that whatever he comes up with, like I trust. This is all about management, right? Just talking about management. I would trust that his decisions will be well thought out and will probably be the best decisions for Disney.
Yes. Yeah, exactly. Yep. And that he has the long-term vision of what the Walt Disney Company is in mind. He's not going to be the kind of character that comes in and tries to weasel his way into a higher compensation plan just to make a little bit of extra money. Like clearly that's not an interest of Bob Iger. Clearly he has a passion for Disney and where it goes in the future. So it will be interesting because Bob Chapek was extremely successful at Disney. I think he ran the parks segment of the business. Yeah. And that's kind of how he got into becoming CEO. But it seems like it's their core media, which is, as kind of Bob Iger said, their storytelling, which funds pretty much everything else. Like the parks don't really exist without the storytelling at the core of their movies and television. So to have Bob Iger come back in and try and fix that, I think will be really interesting to watch. I've said this for a little while with a lot of these big media companies like Warner Brothers and that sort of thing. I think we're going to see them do a lot more. I think we're going to see them return to licensing because essentially what has happened in streaming is it was just Netflix and all of these media companies had no issue licensing to them the same way they licensed to these networks. Then they kind of pulled back all of those deals and put everything on their own streaming services. But with a lot of streaming services not running profitably, I think we'll see a lot of these businesses like Disney do a lot more licensing. I think we'll slowly see more bits of Disney content, bits of Warner Brothers content appear on Netflix. We're already seeing it with Warner Brothers. I think we'll see it. You reckon? I think we'll see it with Disney as well. Warner Brothers sells a lot of content to Netflix. A lot of people aren't aware of that, but they already do a lot of that. And I think it makes sense for a company like Disney to do that because at its core, they're good at creating film and Netflix has a huge platform for distributing it. But, Disney can, be alongside them as well. So we'll see.
Yeah, that would be interesting because, I mean, Netflix, maybe they can organize a deal where, sure, Netflix will probably bring in X amount of revenue because they've got our film on their service. But at the same time, our film gets so much exposure and they're, paying us a very, handsome sum of money because, it's not their content. They have to pay us for it. Maybe there is a world where that happens. I don't know.
Yeah. Disney's Sorry, go on.
I was just going to say, Bob Iger used to definitely say, even though Netflix was becoming a direct competitor, he used to say, whether he meant this or not, he used to say that they treat Netflix more as friend than foe. Yeah. I assume that when they really got deep into Disney Plus, that would have changed to foe more than friend. But I wonder if there is an avenue where they can work collaboratively, even though they are direct competitors. Yeah. I don't know. Maybe.
Yeah, I mean, Disney's definitely the closest out of the legacy media companies of actually building a sustainable streaming service. They're definitely closer than Warner Brothers, which has already decided to cut back on content spend and do more licensing and more selling to companies like Netflix. And Paramount is far off as well. So Disney's the closest. It's just a matter of whether they have the funds to do it. They have huge debts from a lot of the acquisitions and mergers that they've done. So they can't operate streaming at a massive loss for a huge length of time. There's a certain point at which they have to decide to, But I've always said I think it's in their best interest to go all in on streaming, and maybe this is what Bob Iger will do. Maybe he'll sell off some of the legacy media assets and really focus on distribution through their own streaming services, and I think that could work. So it would be interesting to see.
Do you have anything else on Disney?
That's all, except that he's committed to staying as CEO for 2 years, and then he also said that he's going to help Disney find a new successor after he leaves. So they'll obviously work through that over the next couple of years. And then on Monday, the coming Monday, he's going to be hosting a town hall for employees where he's going to talk about his plans for the future. So we'll probably get a lot more detail about what Disney's kind of vision is going forward.
Right. On Monday. I'll be looking out for that. That's going to be very interesting. Very interesting. Oh. And also one thing that before I forget, if you want to if you're just like listening to this podcast and you're like, oh, why are they talking so much about this Bob Iger character? Like, I don't really know who he is or whatever. I would definitely recommend you read his book that he came out with. It was only like a few years ago. It's quite a recent book, which I think is called Ride of a Lifetime. Yeah. That book is so good. I really and it's not like a massive fat long book that's going to take you 15 weeks to read or whatever like that. But it's a really good story of Bob Iger, coming through the ranks at Disney and how he ran the company, how like the principles for management. So it's really, really good book for people that are interested in like stock market investing, and obviously analyzing management is such an important part of investing the way that we invest. So I would definitely recommend you check out that book. And even if you're just like a business owner and you have staff or employees or whatever, there's a lot of really good principles for management in there as well. But it's a really good book.
Awesome.
Audiobook's good as well because I think it's narrated by Bob Iger himself the whole way through.
How good is it when the author actually is the one speaking? It's just so satisfying.
It's so much better. It's so much better, isn't it?
Yeah. Or you have to not know what the author sounds like. Like if I'm reading Ray Dalio has his audiobooks where he narrates them, and I know what Ray Dalio sounds like. So if I was listening to an audiobook and it was some other chap, then it would really bother me.
Have you listened to the audiobook of Principles?
Yes. Yeah.
Yeah, it pissed me off because Ray Dalio narrates like a fair chunk of it.
Yeah.
So I just feel like I'm listening to it. I'm like, oh, this is awesome. Ray Dalio is going to read the whole book, and then at some point he just like stops. And he's like, now I'm going to hand it over to this person who'll take you through the rest of the book.
Yeah.
I'm like, God damn it! And then I just zone out so much when it's not Ray Dalio talking.
Yeah, I know. It's such a nice voice.
Yeah. Anyway, all right, that's Disney. I want to talk about Elon Musk. Of course I do.
Musk. What's he doing?
Man, have you been following what's been going on? He's done so much stuff over on Twitter.
Yeah.
First things first, there's actually three things I wanted to talk about here. Yeah. I'll start with the biggest that's been the massively controversial news this week.
Yeah.
Guess what? Donald Trump's back on, baby.
Donald Trump.
For better or for worse, Donald Trump is back on Twitter. So on the 19th, Elon put out a poll saying reinstate former President Trump. And from that poll, 51.8% said yes, 48.2% said no. And Hamish, there were 15 million votes on this poll.
It's crazy. And I think he said there was like 150 million impressions on it or something. So and a lot of that obviously could be bots, but it was viewed a lot by a very wide audience. I participated. I had to. So I saw there was like 10 million votes on it. I was like, and it was really interesting to watch because I don't know if you watched the poll over time, but when he initially kind of posted it, it was skewing very much to yes. It was like, I want to say 65-35, which is interesting because I guess maybe it went to Elon's followers first, and they're more likely to maybe say, just allow him back onto the platform. And then as it went wider, the gap kind of shifted back closer to 50-50, which is kind of, I guess, what you would expect, especially if you just imagine it was all US, which it wasn't. But if it was all US, then, half of the US likes Trump and half of them don't. At least those are the two kind of political sides.
Yeah. It was very interesting. on the 20th, he followed up saying, "The people have spoken. Trump will be reinstated. Vox Populi, Vox Dei," which apparently roughly translate to "the voice of the people is the voice of God."
Okay.
So there you go. He's back. Although interestingly, I actually checked this morning because I didn't actually check whether his account was back up there, and it's there. It's there. Real Donald Trump. It's still there, and all of his old tweets are there. But he is yet to post a tweet.
Yeah, he's in a bit of a tricky spot because he has this whole truth social thing. And I think he was trying to take it public as well through an IPO. So it's like he can't really use Twitter unless he merges it with Twitter or something like that.
Exactly.
So,
the plot thickens.
Yeah. I wonder if we'll see that.
It's very interesting.
See it.
Yeah. For those that don't know, Truth Social is Trump's social media platform. But I think that what's going to happen is he will stay quiet on Twitter for as long as possible until he needs to use Twitter again because he's going to run for president. So I think there'll be a point in time. I think he'll just stay. Oop, knock my mic around. I think there'll be a long period where he just won't say anything on Twitter and he'll keep posting on Truth Social. And when's the election? I don't even know. 2024, isn't it?
Yes. Yeah.
So I think there'll be
away. Yeah.
Yeah. I think you could potentially not post anything on Twitter for a year or two, or a year or so, and then in the lead up to the election, it'll just be strategic. When it makes sense to start posting on Twitter because you get more reach, then he'll start doing that again.
Yeah, he'll have to come back to it if he wants to have any chance of contending for the presidency again. I would imagine. Because no one really hears about Trump all that much, except when I see the occasional screenshot from Truth Social on Twitter. that's all I see.
Absolutely. You think about all through his presidency and all through his campaign, last time around, or even the original one, all of the media articles were just quoting his tweets. Like that was, That was the only way you really heard from it. It was either like, yeah, sure, he did a press conference, but half of the articles that you read had quoted tweets in there from Donald Trump. So, it's a big part of his kind of media machine. So, we'll see what happens. Anyway, that was the first bit of news. Interesting second bit of news. Elon noted that during the week, Twitter usage is at all-time highs.
Wow.
So he had this is monthly daily active...
Monetized daily active users.
No, monetized, sorry. Yeah, well, I was like, wait a second. Monetized daily active users by week average. And the 11th to the 20th was 259.4 million.
Yeah.
There you go.
It's pretty big. I didn't actually realize Twitter was that big. I always knew they were, quite a bit smaller than Instagram or Facebook, but 260 million daily active users is it's pretty significant. I mean, it's not that small.
It's not. I mean, it's like it's small compared to the other giants, but it's like still not that small. But yeah, it is interesting that I guess he released another tweet like recently, which is just like, wait, I thought Twitter was supposed to be dead by now.
Well, I guess
it's kind of funny.
I guess maybe they don't get as I'd love to hear like the demographic breakdown of that, because I guess maybe Twitter doesn't get as much of the very young audience. I don't know. Like maybe like Instagram has a huge amount of audience from like 14 to 20, right, or something like that. And maybe people in that age range aren't really on Twitter. It's kind of more of an adult place to discuss things. I don't know. I'd be very curious to see that, because I would imagine that on almost any social platform, like Instagram, for example, I would imagine the majority of their audience is like below 25. I would imagine in terms of like daily active users, but it would be interesting to see that. Yeah, I don't know.
Yeah. So anyway, that was the second thing to talk about. And then the third thing, which I'm interested to hear your thoughts on, Hamish, changes to the verification system. Quote, we're holding off the relaunch of Blue Verified until there is a high confidence of stopping impersonation. We'll probably use different color check marks for organizations and individuals.
Yeah.
What are your thoughts on that? Smart?
Well,
I mean,
first of all, I think it was kind of insane that sorry.
It's a bit of a joke, wasn't it?
It's because we spoke about this on the podcast, and I said I didn't know if they were actually going to verify people or whether it was literally you pay for the blue mark. And I gave him the benefit of the doubt that it wasn't just going to be strictly a payment for benefit of the doubt. And he kept talking on about like payment verification as if it kind of helps in the verification process, and it seems like it really didn't at all. I thought maybe it kind of gave me a bit of hope, like, oh, maybe there is something I don't understand about payment verification, like if the name's on the card, they can compare it to the account and, like, you know, do some back end. But no, obviously that's not what happened.
It's like Jesus Christ was verified.
Yeah, exactly. Like, Jesus was back, confirmed. So, but yeah, I mean, it was kind of insane, and yeah, it was kind of funny to meme on Musk for that, because it was like then he had to come up with another verified check for people who were actually verified, like government accounts and that sort of thing, which was the original point of the verification tick. So it's like, it just, to me, it's insane. You're paying $8 a month. You can
for blue.
You can Twitter can contract people to check ID. If you don't want to give your ID to Twitter, that's fine. Don't be verified. But for someone who has a business and it's a public, or like a public figure, I know we're kind of small, but like public kind of people impersonate us and that sort of thing. It's important. I want to be verified. I don't care about the status. That's not, that's
I don't care at all. Yeah.
Everyone's saying it's like all about the status. It's not. It's about being verified. So if I'm talking to someone with a blue check mark and I know they have a YouTube channel, I know or like they're in media, I know I'm talking to them so that I can do deals with them, like brand deals and that sort of thing. I think maybe I don't know. I'm just surprised that Musk didn't understand, or at least didn't seem to care about that aspect of it, which is the whole ecosystem of small businesses online.
I think he gets it now. I think he did care about it, but I also think he's playing on the idea that most people just want to be famous, right?
Yes.
They want to just be like, oh, look, yes, I've got my blue tick. Look at that.
Yeah.
I've got 3 followers. Come on, I'm verified,
Yeah.
I mean, people want to be rich and they want to be famous.
Yeah. I mean, he'll probably make, I don't know, like, there's a ton of money obviously to be made in just selling blue check marks, but it doesn't make the platform better.
Solve the problem.
It doesn't make it a good, it doesn't make the platform good. It really deteriorates the platform.
And the longer this model goes on, the less the check mark means, until it just becomes redundant. People start cancelling their check marks.
Yes.
Because it doesn't mean anything anymore.
Exactly. It's a very kind of short-term minded thing, and it even impacts how people think about, like, if you get scammed by someone with a blue check mark, are you going to trust blue check mark on other platforms where there is verification? I mean, then all of a sudden it's like, what's even the point of having any verification? It's just, we'll just
go back to the Wild West, baby.
Yeah, exactly. But, it is what it is. I honestly feel like it's not that difficult for them to fix that. Charge more than $8 a month if you need to, but to have somebody check ID is not difficult. To have people have to check ID again if you want to change your name, or if you're an organization, you have to submit some kind of proof that you own the organization. It doesn't seem like a lot of businesses do this. Banks do this. Phone companies do this. Like, it doesn't seem like it's that difficult for a social media company to do that. And if you have to charge more for it, charge more for it. And then, less people can get it, sure. But then people who actually need it can utilize the feature. But who am I? I'm just a guy who uses Twitter, who complains about Twitter on Twitter, as Musk loves to point out recently.
Classic. Lastly, did you see the video that he posted recently where he pulled out he went down to the Twitter merch store? Did you see that? Oh my gosh. Jeez. This is classic.
Yeah.
Basically the video is just Elon in the Twitter merch store, and he opens up this closet and it's just full of these t-shirts, and he's like laughing. He's like, look at these. Literally, Twitter has a flipping closet full of t-shirts that say #StayWoke. It's like, man, I don't know.
It's pretty funny.
Political bias, slightly left.
I mean, it is kind of crazy.
If that's not saying that your platform is so left biased, I don't know what.
Yeah, that is kind of crazy to have t-shirts made about that, because then you're all kind. Imagine being a conservative in that office. Like, you would actually have to quit.
Yeah,
like you actually couldn't, or you'd have to just pretend that you were a progressive. It is kind of a weird. There are kind of pockets of politics. Obviously, this isn't most people, but there's pockets of politics where you just despise anybody on the other side, and that is crazy to me. Like, that is insane. Like, yeah, people have different views, people have different experiences. That's okay. Like, obviously, there's extremes that we can all kind of laugh at and say that it's wrong, but. Yeah, it is kind of crazy when you have these kind of cults that form of like, we hate conservatives or we hate progressive. Like, it is kind of crazy. I don't know.
Yep. No, I agree. I just like to sit right here in the I do those like, which side are you? Like politics,
like
forecast
compass
things?
kind of.
The vote compass or whatever it was. I'm always like dead in the middle.
Yeah.
Like, I'm not even kidding. I'm like always in the middle.
Yeah, I have
the compass.
I think I lean a little bit right on like economic issues, because the compass gives you like economics and then social issues. I think I'm a little bit right on economics and then a little bit left on social. So like kind of
I'm the same.
I end up having a mix of both, which I guess maybe gives me the perspective of like, why do we hate each other? Like, looking both sides, like two parents arguing.
Can't
kind
we
of
just
thing.
get
like,
along?
Like I agree with you on this, and I agree with you on this. So that's kind of where I sit. But yeah, it is. It is crazy. It's definitely gotten very heated in society.
Yeah, it's crazy. So in the comments section below, let us know, how do you see yourself politically, and make sure you comment on why you're right.
Yeah. And if you don't believe what I believe, you'll be blocked.
We're gonna ban you from the Young Investors podcast. Anyway, there you go. That's all that's happening in Twitter.
Yeah.
What next, Hamish? What next? Tell me about Fed minutes real quick.
Yeah, we'll do a quick Fed minutes. There's not kind of too much to talk about here, but the minutes from the meeting that happened earlier in the month came out. And essentially, officials agreed that smaller interest rate increases would happen soon, as they evaluate the impact of policy that the impact of the policy is having on the economy. The minutes said a substantial majority of participants judged that a slowing in the pace of increase would likely soon be appropriate. The uncertain lags and magnitudes associated with the effects of monetary policy actions on economic activity and inflation were among the reasons cited regarding why such an assessment was important. And essentially, based on kind of that statement, the markets now expect that at the next meeting, which is on the 14th of December, that there will be a 50 basis point hike instead of a 75 basis points. So there's been a couple of 75 basis points in a row. Now the markets, based on looking at bond prices and expectations, it looks like markets expect at least the Fed to kind of slow down or begin slowing down. The Fed also noted that the minutes noted that smaller hikes would give policymakers a chance to evaluate the impact of the succession of rate hikes. So they don't want to go too harsh. They're kind of being a little bit cautious of continuing to do big rate hikes if inflation is already naturally coming down. But the summary also noted that a few members indicated that slowing the pace of increases would reduce the risk of instability. Slowing the pace of increases would reduce the risk of instability in the financial system. And a few members wanted to wait until inflation is lower before slowing rate hikes. So you have kind of pockets of the majority of the Fed kind of believes that it's okay we want to do slower hikes and just see what's kind of happening. But there are still some members who think we should keep going until inflation's low.
It's the dot plot. Interesting. I don't know if I can add anything to this. We'll just see what happens.
Yeah,
I guess
it's
just one of those.
That's pretty much it.
One of those see what happens kind of news stories.
Yeah.
But yeah, I don't know. It would be interesting. I mean, inflation's on a 4-month downtrend, I think. The headline rate is on a 4-month downtrend.
Yeah, 3 or 4, something like that. Yeah.
3 or 4, yeah. So, I mean, if it keeps going down. But I don't know. They could just keep cranking the interest rate. Like, they could just try and get it down as quickly as possible by just, like, cranking it. But, yeah, I don't know. We'll see.
Yeah.
See what happens. I mean, it's transitory, Hamish, so it'll probably just fix itself.
Yeah. It's going to blow over anytime soon.
Anytime now. And it's still waiting. Anytime. Anything else to add on Fed minutes?
That's basically it.
Okay, cool.
Should we go from here?
Do you want, I kind of want to talk about Elizabeth Holmes. I don't know if you want to keep
Elizabeth. Yeah. Let's so man, this has been a long time coming because of course Elizabeth Holmes was the founder of Theranos, a blood testing startup. We spoke about this. I think I can't remember exactly when it was, but I think the court case
a few months
ended.
ago.
I think the court case ended at the beginning of the year, right? Something like that, or like March or something like that. She was found guilty of 3 counts of wire fraud and 1 count of conspiracy to commit wire fraud. And there was a bunch of other wire fraud charges that were not found guilty on. So they kind of just end up sharing a lot of information on a lot of different potential instances of fraud and then kind of see what sticks, because fraud is very, very difficult to prove. You have to prove that there was intention to lie, not just that you kind of accidentally misled people. And essentially a wire fraud charge is just kind of, it's like intentionally lying relating to money. And in this case, it was lying to investors and customers about what the technology could do. And essentially the company was claiming that they could do really fast blood tests with like a finger prick of blood, which they could not.
And it was like, you could find like a squillion different forms of cancer. It'll test like whether you got cancer or shit like that.
Yeah, it was kind of ridiculous because currently blood testing, you need to do like quite a few, like 3 different vials usually of blood. So quite a lot of blood needs to be drawn and it takes a long time. It's not instant. It takes, it can take like up to a week to get your results back or something like that unless they kind of fast track it. So this was kind of a crazy technology, just a finger prick and, in 5 minutes or 10 minutes, you've got your results of like
5 to 10 minutes, you've got cancer.
Yeah, 500 different diseases. It's like
imagine that you walk in, they prick your finger, and the thing's just like boop boop boop. And the doctor's just like, "How's your prostate?" Yeah. Says you got cancer, mate. Sorry.
It's like that meme. You've got 3 to live. 3 what? 2, 1.
Oh my god. Oh dear.
No, so they obviously they couldn't do that. They couldn't do it. They were using competitors' machines and everything. It was a complete disaster. They even had them in the military, which is some of the sadder aspect of it is it's a medical business, right? So not only were they defrauding investors, but their customers are expecting them to be accurate. And
they're not.
They're not. So that all kind of took place, earlier. Well, the business was ended in 2014, and it took a long time for her to get sentenced. To get charged, and in the court case. And today, finally, or not today, but this week, we got a sentencing. She was sentenced to. Have you seen how long? I think you've probably already seen how long.
Oh, I just read it then, but before I read what you'd put down here, I had no idea.
Yeah, 11 years and 3 months.
It's quite a long time, really.
Supervised. Yeah, what do you reckon?
I don't know. I was just about to say I don't actually know because I like all throughout this case, it was always you kind of doing the research. I was just like listening to what you said. I don't know how like egregious the kind of fraud was that she committed.
Yeah.
But yeah, look, I don't know. I think, if you like murder somebody, or like rape and murder, that kind of stuff, like fair enough, you're gone, mate. Like, please lock that person away. I don't want to see them ever again.
Yeah.
But like, I tend to side generally more on trying to give people another chance.
Rehabilitation
but again,
kind of thing, yeah.
Yeah, really rehabilitate. Like, I know that if I just put myself in that situation. If I had committed fraud intentionally, sure, then that's like I've been very bad. Like that's a really bad thing to do because your customers like I've
realized you were going to confess here, Brandon, but jeez.
Sorry, but it's like I've realized like I've screwed over people with the testing and I've screwed over investors and and it's all because of me. And I'm like, damn. But that's something that if you sure do the crime, do the time, but that's something where through rehabilitation, I feel like, okay, I can definitely learn from that and obviously not make that mistake again or something like that. But I don't know. Like I said, I really haven't looked in depth of how egregious or how bad these kind of fraud charges were, so I don't really know.
Yeah.
What do you think?
No, I probably agree. Yeah, I think there's obviously some, as you said, there's some crimes where, you kind of feel like there's probably no room for rehabilitation, or you don't want to.
Please don't let this person back in society.
Even if there is room for it, you don't really want to take the chance.
Yeah, exactly.
By giving them the freedom. So there's kind of that balance. But yeah, I mean, with money crimes, it can be kind of different. But I mean, it was a massive. I mean, investors lost billions of dollars. So it was fairly significant. But yeah, 11 years for fraud charges is long. That's
Is it? Okay.
That's pretty long. You have to be doing some pretty bad. There has to be quite a lot of charges typically for the case to be that long. Something that was kind of funny out of this is she has to report to prison in April next year. Like what?
Oh no, sorry, I can't go next week. I've got my hair appointment, and then I can't go the week after that because I'm going to Delaware to see my mom.
Like what the hell is that? Like what? She was charged like 8 years ago or something. Like she's waited long enough. Like send her to prison. Like
imagine the police officers show up to your door with her handcuffs, and you're just like, oh, damn, yeah, you know what, guys, you got me, but I've got to, my schedule's pretty full for the next couple of months. So would you guys mind coming back maybe early next year? That'd help me out so much. Oh yeah, no worries, Hamish. All right, we'll see you then. It's like, what the hell? It's like, should she just be chucked in prison straight away?
Yeah. And the crazy thing is, obviously with these kinds of crimes, you don't expect people to be held in prison. You expect them to be out during the court case and all of that. But the crazy thing is, she wouldn't have that much longer of her sentence if she just didn't take bail. If she just didn't take bail and just stayed in prison during the whole court case, she'd almost be out. She'd be out in a few years. So it's kind of an interesting perspective of she should have just known she was going to prison and then just taken that. No, but it is weird. I don't know why they have to report 6 months later to prison. That seems really weird to me. Like, surely as soon as the sentence comes down.
All right, I'll see you guys. See you guys in a bit. Yeah. All right. Cool.
Like they're giving.
Bye, guys.
Like giving someone with probably quite a lot of money connections 6 months to figure out how to escape.
Yeah. Yeah, true. I don't know. Like, surely there's she can't. I don't know. I guess they're
does she wear an ankle bracelet at least or something?
Yeah. Can she not leave her house or something in the meantime? I don't know.
Yeah. Who knows?
Otherwise,
yeah.
Get a plane and leave the country somehow.
Yeah, just get out.
Yeah. Anyway, there you go.
Yeah.
There you go. That is the conclusion to the saga. Well, I don't know. Maybe it's not the conclusion to the saga.
Yeah,
maybe there's more to come.
Yeah, maybe in 10 years we're doing this. What's this? A new business called Haranos. Oh, what do they do? They do blood testing. Elizabeth Gomes. Who's this?
Elizabeth Gomes. Wowee. All right, that's very good, Hamish. Should I I'll do one more story today. What should we do? We should talk about, I just wanted to quickly cover this FTX Contagion stuff. Yes. I read this really interesting article, which is basically just showing, it was Morgan Stanley's list of companies exposed to FTX. Just to see, because we talk about this concept of contagion, and I don't I kind of knew what it meant without really knowing what it meant. It basically meant, I'll read you the exact definition. Financial contagion refers to the spread of market disturbances, mostly on the downside, from one country to the other, a process observed through co-movements in exchange rates, stock prices, foreign sovereign spreads, and capital flows. But it's basically just my definition is just when something happens in a financial market that then causes a flow-on effect into other areas or other businesses. Yep. So in this case, when we're talking FTX, contagion would affect any entity who's invested in FTX, holds stock in FTX, or is exposed to FTT token.
Right.
So, for example, Sequoia held $213 million investment in FTX, whereas the cryptocurrency exchange Binance was also listed as one of the top holders of FTT token. They held over 43 million tokens. So 2 different ways that they could still be exposed to like the downfall of FTX. Anyway, the article that I was looking at reads, shares in Coinbase came under renewed selling pressure this week on concerns about spillover from FTX's collapse earlier this month. But many other companies are also exposed to FTX's failure. In the last month, Coinbase is down 30%. Strategists at Morgan Stanley on November 17th compiled a list of 63 institutions that may be exposed to losses or have their capital stuck on FTX's platform. The investment bank said it sourced its information through public disclosures, media reports, and its own research. Companies named include lenders, traders, exchanges, and investors. FTX owes its creditors at least $3.1 billion, according to its own filing with regulators last week. The table below shows 19 of the companies identified by Stanley Morgan, even. That'd be interesting. I'm going to start a rival. Stanley Morgan.
Sounds pretty good, actually.
I might give it a crack. They've probably got that name locked down just in case anyway. Anyway, 19 companies identified by Stanley Morgan as having significant exposure to FTX. So heading the top of the list, Sequoia, 213 million. There's a Singapore firm called Temasek Holdings, 205 million. Genesis, crypto lender / trader, 175 million.
They're going under,
SoftBank.
I think. Genesis.
Are they?
Yeah.
Oh, that's what we were talking about last week. Genesis. Yeah. They're 4th on the list. SoftBank, venture capital, 100 million. Ontario. That was the Ontario Teachers Pension Fund or something like that. Oh,
yeah. Who was managing that?
What are they doing?
Yeah.
What are they doing?
That's not great. That's pretty bad.
Teachers Pension Fund. Oh, that FTX crypto exchange looks pretty good. Let's lock away the Teachers Pension Fund. Let's put some of our assets in that. Oh my gosh. Anyway, that was a $95 million loss. Galaxy Digital, 76.8. I'm just reading down the list. What is the next one that we know? What's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11th on the list is Coinbase.
Funny thing about
15 million.
About Coinbase, I saw something on Twitter about their quarterly filing. They did 2.5 billion. This is crazy. So they did 2.5 billion in quarterly revenue in the last quarter, and they have 1.1 billion in stock-based compensation.
That's just ridiculous. What the hell?
That is just blatantly management just farming money out of this company, and obviously they're operating at a loss. Like that's only half of their expenses, but they lost in the last 9 months $2 billion on 2.5 billion in. Sorry, that was 9 months in total. Sorry, so 2.5 billion in revenue over 9 months, and they've lost 2 billion. So they got 4.5 billion in expenses. And 1.1 billion of that is just stock-based compensation.
What was the other stat you were saying? Like per technology-based employee, or was that part of the post? I can't remember. I can't remember. It was like I don't know if this was entirely true, but they were like, there's $800,000 of stock-based comp per tech employee.
Per tech employee, yep. So. Management's upper management, overall, not just the executive team, but they're laughing all the way home, assuming that they're selling the stock
all the way into bankruptcy.
Yes, right. Yeah, they're just milking this company until it's. No, I actually don't know too much about Coinbase, so I couldn't speak to the business, but
still ridiculous.
Yeah, it's crazy because their revenue dropped by about 50%. Through all this COVID stuff, which kind of makes sense, lower transaction volume and smaller transactions, that sort of thing. But their expenses continue to increase, including their stock-based compensation, which is just kind of like, it's weird. It seems like it would be a business where it shouldn't be too complex. It's an exchange. They just collect fees. But yeah, I don't know. Yeah,
I don't know, dude. I don't know. But yeah,
these mind blowing.
That was a wild story. When I saw you post that, I was like, what the heck? Anyway, back to this list. So yeah, Coinbase was number 11, $15 million exposure. And the next one that I know is Crypto.com, which has $10 million exposure.
Yeah. And
I don't quite understand. It says Celsius and Voyager on the list, but aren't they cooked?
Yeah.
Aren't they gone?
I mean,
I don't quite understand.
So I guess they're probably in bankruptcy filings. So
Right, so
they're still organizing their books. They're kind of seeing, Voyager, we found 200 million. Oh wait, it was in FTX. Oh, never mind. They're trying to pay their customers and that sort of thing, trying to organize their assets. So I guess it just doesn't help their situation, which is already a bad one. But same with Celsius. I can see on the list there that's they went bankrupt as well. So yeah, it's starting to look like a bit of a graveyard. The old crypto landscape.
It is, isn't it?
Unfortunately, never good to kind of see this happen, but it was also something we could have seen for a fair way off. I think that at least some kind of implosion was coming. So yeah,
Michael Burry strikes again. That's for sure.
Yeah. I mean, that was a pretty easy call, I think. That
it was.
that crypto was a bubble.
Yeah. As soon, man, the people just. Oh, tell the people about that tweet that you found. That time capsule tweet.
Yeah.
That's pretty funny.
Yeah, I think so.
It's not. We're gonna have to explain it. It's very visual, but you know how sometimes people go back and find old tweets that people have.
Yeah.
So Hamish found an absolute ripper.
Yeah. So this is
about crypto.
So,
read it.
Yeah. So Cooper Academy. He has a YouTube channel. He's on Twitter as well. He shared this. So I'll give credit there. But this is someone tweeted in earlier this year. It was actually in June of 2022, so it was only a few months ago. Pro tip in crypto: diversify your portfolio. 25% in Celsius, 25% in Terra, 25% in Luna, and 25% in BlockFi, and they're all bankrupt. It's like 25% in Theranos, 25% in Enron. Yeah.
Oh man, jeez. Tweets that don't age well, hey?
Yeah, it's like when you play Minesweeper and just the first time you click, it's just a bomb.
The first click you make is a bomb.
He's just picked out.
That's so funny.
He's picked out
what
all
an
four.
Analogy.
He's picked out
That's
all
a great
four.
analogy.
Yeah.
Oh dear. Anyway, there you go.
Let's do some Q&A.
Crypto. Oof, ouch.
Should we do some Q&A?
Let's just do let's do a few. Where do you want to go?
I want to start here. This is an interesting one. A little bit of a different kind of question to normal. Out of the finance community on YouTube, who do you think is the leading content creator, I guess creators, and where they would sit on the overall ratings? Do you have any thoughts on that?
Like the stats? Like where they
I don't know about that last bit, but just, I don't know. Who do you think's kind of leading the content creation in finance at the moment?
Well, I mean, by stats, I think it's got to be people like Graham Stephan, me, Kevin, those Minority Mindset, those, Andre Jick. I think just by raw, but they're
the FTX boys.
Yeah, but they're more. I don't know. I think Graham is the most finance education focused. Yeah. I think for those guys, their bread and butter is marketing.
Yeah.
Like they're very good at marketing, and they've taken their ability to market themselves and they've applied it to finance, which is a very high, revenue, CPM kind of niche. So they've figured out the best way. If I market myself in the finance space, then I will make the most money. So that's kind of the direction that they've taken. But I personally, I would put like the leaders of the finance space. I think for me, like the Patrick Boyles of the world, the Plain Bagels, like the people that have still very healthy following. They're very big channels, but they also are very well versed in different areas of finance. So they're very, they're always, very rational. They're never trying to like market themselves like over the top, like, oh, make sure you do this and do that. And this is like, these are the risks, but they're always very good. They're good educators. So they get the point across. But I think I think those in terms of creators, but there's also like, I think another kind of type of finance creator, which is like, Vox or like Financial Times, or when they do those like films that I actually find are very good as well. So, and they're more like institutions, but they still have millions and millions of followers, and they put out good content a lot of the time. So
yeah,
I don't know. I guess what are your thoughts?
Yeah, I guess there's like kind of a lot of like well put together kind of corporate-ish, not really corporate, but like some of it is from corporate, but like
it's designed to advertise their companies, but so it's done in a documentary style way.
Yeah, but in terms of creators, like I said, I probably watched Patrick Boyle and Richard from the Plain Bagel the most out of any channel. I definitely don't watch Graham or Meat Kev. I used to watch their channels a little bit, but you're right. Their content is kind of I don't know. It's kind of to me at least. This is just my opinion, but it's very kind of generic and wide serving. And I'm much more interested in hearing about specific, a bit more detailed finance stuff from Patrick Boyle or Plain Bagel.
Yep. And there's going to be heaps of people that I've missed on that list, which I'm very. I don't mean to miss anybody, but
yeah, there's a lot. It's a massive.
I'm looking through my
now.
Subscriptions because I know I'm going to find like 5 different channels that I've just not remembered just off the top of my head.
Yeah. The positive and negative thing is it's a huge ecosystem now, so we're getting a lot of variety in the content space, which is great. I mean, there's a channel called Benjamin who makes finance related content, but it's comedy, and I find it comedy, so entertaining, and it's refreshing just to have. They're so good. He doesn't post very often because they're very intensive videos that he makes, very well researched. But having kind of entertainment mixed into finance, I think is great. So there's a lot more variety, but there's also a lot of not so great channels now as well.
Yeah, I think that's to clarify kind of what I was saying before. I think now that you've mentioned that, there are some creators that go, "What's the trend? How do I capitalize on the trend in a finance way?" And then there are people that are like, they might still say, "What's the trend?" But they're like, "How can I educate around this topic?" And I tend to gravitate more towards, this is what's happening in the world of finance. These are like FTX, whatever. This is the big thing but this is what happened, and this is the education part, and these are the risks and what you should learn about. And then there's the click, like the thumbnail, "Oh, FTX exploded. Oh my God," which is just like more on the entertainment marketing side of things to try and get clicks. And they're kind of going in that direction because they know that that's the trend, as opposed to that's what they want to educate about, kind of thing. Yeah. Yeah. It's very, very interesting space.
Yeah.
Very interesting space.
It's definitely evolved a lot over the past couple of years, so it's been interesting to watch. Yeah.
Nate O'Brien, actually, I'll give a shout out to Nate. Nate's very good. I think he's kind of in with that more marketing crowd, and I think he does like that kind of marketing and business side of things. But if his content is not like the clickbaity, "Oh my God," like his content is actually very insightful. So I'll definitely give a shout out to Nate O'Brien.
Yeah.
Like, what was his one of his most recent videos that actually might not be recent anymore, but I was watching like, where was it? Oh, that's right. Like Japan's debt crisis and that sort of thing. And he's like going in depth on like currencies and stuff like that. And I'm like, wow, nice. Good. Yeah. Good video.
Yeah. Whereas, it will be, to me, it'll be really interesting to watch over the next, I think, 5 years, because we'll see a lot of content creators in finance try and bridge the gap between mainstream pop culture on YouTube and the finance community. And while there are massive channels, like I think Graham's probably the closest to that out of anything in the finance space. But I think we'll probably continue to see more of that, where there's obviously going to always be the hardcore finance stuff that's really educational, but there will be more bridging of the gap into kind of pop culture and to kind of try and grab a greater audience. Kind of like how, like The Big Short, for example, has like a lot of technical stuff in it, but it's accessible to a wide audience and loved by a lot of people as just this kind of very interesting situation. That's something I'm curious to see over time.
Yeah. Yeah, I'm trying to just scroll through my subscription. And Hamish Hodder, of course. Hamish Hodder right up the top.
Of course.
And Investing with Tom.
Yes.
And New Money.
Yeah, we're going to get Tom back on.
Yeah, at some point. Yeah, we definitely need to.
All right, I think we're rambling. We'll we'll wrap it up there for today. Did you have anything else you wanted to chime in?
No, maybe I could talk about this very quickly on air. My grand plan, Hamish, is getting. I'm trying to. You know how we want to go to America next year?
Yes.
My grand plan, and I'm going to try and find a sponsor to help with this.
Yeah.
Is to do sponsored videos. So find a sponsor that will sponsor our whole American trip.
It's actually really
that's
good
what
idea.
that would be so cool. That's what I want to try and do.
Yeah.
So I want to try and get us back over there. I know Tom's gonna be busy next year, but I'd be like, hey Tom, I've got a sponsor. You want to come?
Yeah.
So that's
really
my
good
grand
idea.
plan.
Yeah, because we're probably.
I don't know. I haven't approached any sponsors. I hope maybe a sponsor would be interested in working with us to create like a mini series of videos that we do while we're over in the States that would be interested in covering the cost. But that is my goal.
Yeah.
I want to go back.
Yeah.
I had so much fun. How good was that trip? It was so good.
Oh, we're definitely going back.
And we made some ripper content while we were over there.
Yeah.
It was so good.
Yeah, it's good fun. No, it's fantastic. Yeah, I'm looking forward to it. Absolutely.
If you want to sponsor our America trip, guys.
Yeah, so if you're just a viewer and you...
But yeah, anyway, sorry. Yeah. We can talk about that more off air maybe.
Yeah. Thanks everyone for tuning in as always. If you have any questions, feel free to leave them either on Spotify, or over on the YouTube version of the podcast. You can leave your questions on both places. We grab questions and try and answer a couple at the end of each week. But thanks as always for joining us. Thanks to Sharesight for sponsoring. Head over to sharesight.com/young investors if you want to sign up to a free plan or a paid plan for 4 months off a yearly subscription. And thank you, Brandon, for joining me as always.
Yes,
and
sir.
With that said, we'll let you guys get back to the rest of your weekend and we'll see you next week.
Enjoy. Bye-bye.